Roblox is the game development platform that lets its users both play games and develop their own, and it's become extremely popular over the years. But as I said a couple of weeks ago, this is an incredibly volatile stock, so any investor needs to keep that in mind when going into it. Roblox proved my point this week when it reported earnings and reported a bigger loss than analysts had expected. To make matters worse, the chief financial officer, Michael Guthrie, did not give forward financial guidance, so analysts have no way of knowing which way they think Roblox could head from here. The problem was that bookings came in lower than what was expected. And the way that Roblox works is it sells gift cards and Robux, the in-game currency. And these are called bookings. Even though people can buy these gift cards and not redeem them, the sale of these gift cards does influence Roblox's earnings. So it came in lighter than expected, resulting in Roblox having a 46-cent loss instead of the 44-cent loss that analysts expected. And even though that wouldn't have probably made the stock sell off significantly, the lack of forward guidance did. The day after earnings, Roblox ended up selling off more than 22%. And filled my next buy order, which went through at $31.35. I added 7.14% to my position at this point and replaced the shares that I only just sold a few weeks ago at $45.60 on July 18th. I locked in a 31.25% discount on these shares, and it ended up lowering my per share cost 2%. Down to $43.95. Now, if you're a new investor, you need to remember this is an extremely volatile stock. And the way I manage my own risk in positions like this is I don't give them a full allocation size in my portfolio. Where a full allocation size in my investments in play portfolio is more than 7%, Roblox actually shares a single allocation with 5 other positions, which means all 6 can't ever be more than 7% as a combined whole. This way I'm managing my risk. There's always a possibility that any stock can go to zero, but for some of the more volatile ones, particularly ones that are exposed to specific trends that might just fall off the face of the earth, the risk is much greater. So going into an investment like Roblox, you need to know in advance how much money are you comfortable losing. This isn't about how much money you can make. It's about how much money you can lose. You should always think about every investment in that way. That being said, I do believe in Roblox's management and the product for the long term, so I'm not going anywhere. In fact, my next buy target is down at $26.35, a point that you can see in the past I've bought at before. If Roblox recovers and ends up testing the highs it saw in July, I will continue to take profits in this position, peeling off the shares I just sold and managing my cost basis over time. As I said, I really do like Roblox for the long term, but also, like I said a few weeks ago, it is extraordinarily volatile, and a sell-off of 30% from its recent high is not unusual for this stock, so you need to know that going in.